guys, it's Carter. I hope you guys are all having a great and amazing day today. Now, in today's video, we are diving in and we are looking at the one and only Disney stock. The stock is up about 10% today, and we're going to be analyzing what's going on with it and answering that main question that a lot of you have of should you buy this stock. So I hope you guys enjoy it. Let's dive into the video. Now, for those of you that don't know what Disney is, you must be living under a rock because Disney is a media powerhouse. They own virtually a whole bunch of media. Really, they own Marvel, Lucasfilms, which is Star Wars, Lifetime, ESPN. They own a whole bunch of stuff, and obviously they have all the theme parks that I'm sure you and I have gone to. Now, what we've seen over the past year is this stock just be very, very volatile with a lot of sell-off, right? Looking at it, it's gone from about $200 all the way down to about $97. So it's sold off about half of its market value. And if we go ahead and we keep looking out, you'll notice before Disney had this solid, nice upward trend, we had a little bit of some sell-off back in 2020, immediately rebounded because of Disney Plus streaming, and then it just slowly stair-stepped its way down. Now, why did this stock get sell-off? Well, if we start looking at some earnings reports, you'll notice they missed some earnings. Anytime a company misses earnings, this will cause a lot of panic with investors saying, oh my gosh, the company's going under. Oh my gosh, company's losing money. And if we just keep going through them, you'll notice we've just seen some shakier earnings reports that has pretty much caused a lot of panic among Wall Street. And if we go ahead and we look at the 10-minute chart, you'll notice today the stock went from about $92 all the way up to $103 before selling off a little bit this morning here. Now, the reason why that is because the old CEO, Bob Iger, is back. I believe that's how you say it. I may be wrong, but here on Market Watch, you'll notice this little news article here. This right here is Bob. He is now the new CEO, and the old CEO, I forget his name, was Chapek or something along those lines. He is stepping down. So the reason why Bob, I believe, is back is because he did a phenomenal job with Disney Plus, the streaming. He pretty much brought it to life, rebounded the company, rebounded the stock. When Chapek, I could be butchering that name, but what he did is he really focused on the parks, right? He did well managing the parks, in Disney World, Disneyland, Epcot, Hollywood Studios, all of those. He made them after all the lockdowns and people still had to wear masks. He did a great job managing going through all those hard times. So now that the parks are pretty much back, they need somebody to pretty much focus on streaming, and you'll notice analysts are looking for a more focused approach to streaming, and that's why pretty much he's back. So I think that this is a fantastic thing for the company because they're already doing well inside the parks. Their cruise lines are back. Now the only thing they need to really focus on and step up their game is Disney Plus, because right now in the streaming world, I'm sure you and I know that there's virtually every single media company has some sort of monthly streaming service. Netflix, HBO, Prime, Hulu, which Disney owns, but so much stuff out there, right? So Disney needs to have some sort of competitive advantage and start separating themselves from others. And if we go ahead and we look at this right here is the macro trends of Disney. You'll notice that the revenue is still up. It's about 8% in the past quarter. In the past 12 months, it's up 22%, which is actually pretty decent, right? You want a company that is increasing that revenue. If we go ahead and we look at one of the most important things, which is cash on hand, they have about we'll round up to $13 billion in cash, which seems like a lot, but you'll notice it's a decline from the $16 billion they have. If we go ahead and we look at this long-term debt, they have $46 billion in debt. So they have way more long-term debt than cash on hand, which is never a great sign, because if they ever go through a hard time or struggle, they'll need to either take out more debt or start pulling from that cash, which will still dilute the company as well. And they have a pretty low profit margin at about 3.8%. Pretty much what this means is for every $100 Disney gets, they profit $3.80. Comparing it to other companies, Apple has about a 20% profit margin. Visa has about a 50% profit margin. So profit margins are very, very important. We just want to make sure that they are working on that and increasing it over the next couple of quarters. So guys, I think answering that question that I'm sure we all have of should you buy, Disney stock? For me, I think Disney stock is a great company. It's a great stock to have in your portfolio to stay diversified. But as far as hitting great growth and stuff like that, you're going to see a little volatility, especially with that new CEO coming in, because we don't know where his headspace is at. But overall, I think it's a great stock. Dollar cost average it would be a fantastic idea. Not to mention, it's under $100. So this historically always represents a good opportunity to start that process of investing. Right? You'll notice if we go ahead and we start zooming out with this chart, you'll notice that this, if we go ahead, there we go. If we go ahead and we get buying pressure almost every single time it hits that $100 mark. So now it's $97 a share. Yeah, this is maybe a little overvalued in the short term, but in the long term, I wouldn't be surprised seeing the stock hit 120, to 145 in the next 2 years. So for me, I think it's a great stock. Dollar cost average it, keep it under 2% of your portfolio size, and see what happens with it, guys. So I hope you guys enjoyed it. If you guys did, hit that like button, subscribe, and we'll see you guys later. Remember to stay happy, stay positive, and stay safe. Take care, everyone.